What's going on, guys? We just recorded, or so we thought, a whole 20-minute video for y'all, and anyway, we got nothing of it recorded. We forgot to hit the record, so we're gonna come and explain it, and hopefully you guys will understand. We'll just start right here at the supply zone. So, market has obviously been trending down since Tuesday at 10 o'clock at night. And ever since Tuesday at 10 o'clock at night, we've been going down. We haven't really come back up, even though we've had these massive pullback wicks and stuff like that on the 4-hour time frame. We haven't been able to get back up to the high from Tuesday, right? Let's go ahead and go back an hour. So we're going to start to go down in time. This is my 4-hour time frame. This is where I do all my analysis. This is where I set all of my trades up. And as you guys can clearly tell, it was super easy. I love when the market falls personally, because the market always falls so much faster than it climbs and so much more aggressively than it climbs. So you can honestly get fairly easy trend trades out of here. And that is something that I want you guys to take from this video. Trade within the trend. That's going to make you so much money. Let's see how much we made today. We are up to $3,582, and I'm done for the day. I'm not going to take any more trades, and that's something that you'll get with time. In the beginning, there's a scramble for making a lot of money and stuff like that, and then as you start to make money, you'll kind of level out and be like, okay, this is enough for today. We're gonna stop. We don't need to try to make 10,000 a day or 20,000 a day or crazy numbers, 500 a day, 200 a day, $50 a day. I don't care what your goal is. Simplify that bad boy and just be like, I'm just trying to get a $5 move out of this, and however many contracts. That can be one contract for 150, two contracts for for 250, two contracts for $500, etc., right? And then the more contracts you add is what's going to make you more money, not the moves. The moves themselves will probably go unchanged. The range that you're able to trade within will probably go unchanged. But step one, always trust the trend. The trend is your friend. Going anti-trend or counter-trend is not going to work in your benefit that often. To go counter trend in a good way, you need to get in on the exact move. So let's go back in time and let's look at what we were looking to break out from, right? So the first point is this right here, Wednesday. Let's go to 1 hour time frame. 1 hour time frame right here. Once we broke, was this Tuesday or Wednesday? On Wednesday at 3 o'clock, once we broke the 1 hour time frame, and really at 9 o'clock in the morning, once we broke the 1 hour time frame, I started looking at what's lower, because once we hold below that, once we pushed it back up and we couldn't get all the way up here, I started looking lower. What's below the 200 EMA for the 1 hour? And as you go down, it's this blue line here. So my first trade would come off of the blue line there, going to the downside into the zone, and then I would exit the zone. But that right there, 85 to 45, that is a $10 range. So that's how I do most of my trades. I usually won't get an entire trade like this. You guys have seen me take like a couple lately in micros that'll go like that, where I'll ride the whole time, but I'm not really willing to hold beyond like an hour. So the 1 hour, $10 contract trade, you get anywhere between $6 and $10 depending on how long you hold it. We wicked out, so I got the full $10. The reality of this trade is that it came from $58.59 and went all the way down to $58.40, which is $19. But of that, I just wanted the body of this candle to the floor of this demand zone. And then once we broke the demand zone, then I started to go, we're about to fall, because the first thing we're looking for is this little wick over here on the left hand side. When we got that wick overnight and we didn't push back up to which was the demand zone, now the supply zone, I was like, we're about to tumble. Get ready. So now my demand zone, which says supply zone right here, we went into it and we started to violate it. We kept going down. We never even went back up to touch the top of the demand zone, and I was like, oh, it's time. So I fell asleep at the 2 o'clock push, so I missed it, got back up, and then at 9 o'clock, we went ahead and we get into the trade. We get in at 58.03, which is way down here, because that's what happened at 9:30. That's where we were, and we took 58.03 on down to 57.95. Now as we go to the 15-minute time frame, I'm sorry, the 1 hour time frame, where's my 200 EMA? Are we in the right stock? We're in the right stock. It was down here before. All right, let's check the 15 minutes. Oh, it's like 10:30. We gotta go back. No, something's off. Okay, so the 200 EMA was down here. Now it's like way up there. Is it the 1 minutes? I think it's the 1 minutes. I don't know, guys, but earlier we went down and through the 200 EMA, and now we're like, it's way above us, so I guess it's shifted up. But when I took my trade, the 200 EMA was down here where I exited at. So I guess we shifted below it, even on the 1 hour. That makes no sense. No, the 4 hour. I'm sorry, it's the 4 hour. I'm messing up. That's me. It's on me. Here we go. So the 4 hour 200 EMA was right here, and we went all the way down and through it, and now we're heading down to these blue lines. We're going to continue to go down. We're heading for my prime demand zone, which is way down here at 57.24, which would honestly be about $100 move to the downside. We're at $80 so far today. So if we get down to, let's go over to SPY real quick so you can see it. If we get down to this demand zone right here of $70, 570 flat, there's no reason that we won't hit $100 down. It's another $2, so that's $20 on ES, and that would make us a $100 dropping day. Now if we go beyond $100 and we're heading for that 565, 569 area, and it's looking like we're kind of tapering off right here, but we break down to this next one, that'll give us the full 572 that we're looking for over here on SPY. If not, we'll react off of this line. We always react off of these lines. Look, you reacted off of it right there. We went up halfway. We came on back down. But that halfway is 83 all the way up to 88. So a $5 play there. Then you can catch it to the downside, 88, and take it on down to 70. It actually went down to 68, which is a $20 play in and of itself. But that's how I always draw it up. I draw it up on this 4-hour time frame. Then I can just go backwards in time, and you'll start to see, like, look at that beautiful play right there. Let's zoom in on that. Okay, we had some consolidation. We broke through. We came back up to it, giving us a chance to enter. And you're just staying below that 9 EMA. Once you get back below the 9 EMA, take the trade. Ride that bad boy down as far as it'll go. If it breaks out and goes back up to the 23 or towards the 23 or this blue line, you know that you need to get out of it. But since you got in at the blue line, look at how it wicked up real quick. And then it was down, 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 man. And that is quite a fall over 1 hour. And that's where I got in. That's where I came in. So now we go to the 15 minutes. You'll start to see it even more. 15 minutes gave us up something at 8:15 right there, where we never had to even worry about what was going to go on. The market was trending down, so I didn't expect at 8:30 for the market to shoot up or anything like that. So I wasn't worried about the 8:30 shoot up. Just get in at the top right here. I just wasn't awake. I was asleep at the time, and ride the market the rest of the way down. We've been going down ever since. And then as you go to the 5-minute time frame, you'll start to see even more opportunities to get in there. And then of course on the 1 minute where I take all my scalps, you'll see like 100 billion opportunities to get in. And all I was doing was riding below this 9 EMA. I get in at the trade when we're pulling back down through the 9 EMA, ride the 9 EMA, and then for me, what happens with me getting kicked out, because I would have stayed in this trade until we got down to this blue line, but the reason I got kicked out was because you can see this little wick right here. This little pullback is always going to kick me out because I chase my plays pretty tight, and that's just part of my personal strategy, because I'm only looking for $5 or $6 or maybe $7 of a $10 range. I'm not looking for the entire $10 range. If I was looking to like carry a trade for longer, then I would move my stop loss far less. I move it a lot. You guys see me move it. I move it pretty much the entire time that I'm going. I would move it far less if I was looking to hold a trade. But even with this movement from here to here, it's 10 contracts at 58.03, selling at 57.95. So that's $3,582 respectively. And so about 3,600 is what I was probably getting before we had to pay the fees or whatever. But then after that, I fell down even further. I could have got back in, but like I said, manage your greed, because greed will cause you to make mistakes. And with mistakes comes lost money and blown accounts. So once the play already starts running, you would have had another opportunity to get in below this right here. And that's probably where I would have taken the next trade. I would have skipped this candle. And once we broke out below there, I would have been looking to clear this wick. And then once we broke below the blue line, I would be like, cool, we'll ride for the next blue line. As you can see, we hit the next blue line, started consolidating, pulled back up to the blue line there. So I'm getting out of the blue line no matter what. And then we're going to go ahead and go back up and then further push down to the next blue line. And it always happens like that when you're in a downtrend. You're going to go from blue line to blue line, and it's going to happen much faster than it does when you're in an uptrend. As you can see, when it's in an uptrend, it's going to go slower. The candles may take a little bit longer, and then you'll get back into it, and the downtrend will be like boom, boom, boom. And these are 1 minute candles, so it's just awesome. Still below the 9 EMA the whole time. We break above the 9 EMA, you ignore those parts. We come back below it, you take your trade. Same thing when we're going up. We're below the 9 EMA, you ignore those parts. We break above it, you take your trade. We come back to it, you get out. Keep it super simple, as the KISS acronym goes. Keep it stupid simple, keep it super simple. I don't care how you want to say it. Keep it as simple as possible, because the market is already hard enough to trade in without you making unnecessary mistakes. FOMOing in or over trading or trying to get too much money at one time. Give yourself accumulated. This a $3,000 trade is insane. In my old job, I would take 2 months to make $3,000, maybe 2.5 months to make $3,000. So that's with a lot of overtime too. So when I look at things like this, I go, you know what? That to me is enough. I'm gonna go play with my daughters. My daughter's at school right now, so I'm not doing anything with them. But I'm gonna go play with my daughter. I'm gonna go for a walk. I'm gonna go hang out with my mom and dad, stuff like that. Gear up for the next trading day. I like to close down for the day, so I will look at the charts all the time. I look all the time to see if there's just like an amazing trade that I have to take. Then I will hop in on that. But I look at the charts all the time. But what I'm doing is I just set these alerts, and my alerts go off at each one of these blue lines. And you can see my next blue line is like way further down, because there's a large amount of space on the 4-hour time frame between right here and the ground level of the next one. So the next one is way down there. You kind of got a point right here where we're already hitting. Pretty sure if I turn this on, it'll activate almost immediately. So we will put a blue line on that one as another level of support. But overall, the next level is way down here. So we come all the way down there. You're talking about touching my demand zone and having a massive reaction off of it. We shall see. But be patient with yourselves, guys. Practice, practice, practice. All these lines were drawn out months in advance. You can tell how far they were back by how far they stretched. So this one was back in August. These were back in October. And then we just kept stretching them across and stretching them across. We got plenty from September and stuff like that. So these go months back, and they hold valid. As long as we haven't gone back there and already, pushed through it, they hold valid. So always keep these up and keep stretching them out as time goes on until we're no longer in that level anymore. But we're looking for that 571. We're struggling at 572 right now and pushing down in the 571 80-ish area. We're looking for that 570 flat. And I think that's about the area where we'll kind of taper off and be like, okay, that's enough of a fall for the day, which will take us from Wednesday at 58.89. Let's go to SPY. I want you to see it on SPY. It's easier. So that'll take us from Wednesday at 581 to 571 where we're at now is a $10 fall to 70, which is a $12 fall over the last 2 days. We're down $7.99 so far today and pushing. All of this stuff is red. All of this stuff is coming down. And don't panic. It's not like the crash or anything like that, but we have been pushing up for months. We've been pushing up since long before August, since October of last year, honestly. 2023, we've been straight up. It can't happen like that. We have to have these drawbacks. We have to come back to these demand zones. Be patient with the moves. Get yourself a great move out of this demand zone here. If we hit this demand zone and it holds, you better believe you're gonna get yourself a skyrocket out of there. So you can probably swing that to the upside, or if you're me, you're scalp it for a little bit. But I want to see us come down to the demand zone. I want to see us touch it. I want to see us have a strong reaction out of it. It's Thursday. That's going to set up a really good Friday, too. That'll set up a good afternoon, even. It's 10:43 right now. Get on down there. Get on down there and touch that bad boy. Again, this is another full transparency trading session. Don't want to drag on for too long. You guys understand. You get it. You guys are great traders and stuff like that. You know, I want to see you all do well. I don't believe that we have to be the people who lose. Obviously, someone's going to lose in this market. But if we can manage our losses, and everybody should have good risk management. If we can manage our losses, overall, we can be winners. It doesn't have to be these massive companies and stuff making all the money. As retail traders, I consider myself, you know, to be on par. I'm trying to trade like the big dogs. I'm not trying to trade like a retail trader. I'm not chasing plays. I'm being patient, waiting for the catalyst to happen, and I'm taking the catalytic trades to the upside and downside that way. I want to be like the guys who are moving the market. I don't want to trade like a guy who's just reading the chart and taking random trades. That's my entire goal. I want to be able to make massive amounts of money because I'm trading like people who have massive amounts of money. You know, if you want to beat the best, sometimes you got to be like the best. You know, reversing that saying, if you want to be the best, you got to beat the best. I'm not going to be able to beat those guys anytime soon. They got trillions of dollars, billions of dollars. I got a couple hundred. Okay. But you guys have a good day, man. This is cool. This is a good day to ride the trend to the downside. Just trust the trend. Once we switch to the upside, ride that to the upside. Ooh, we're going down. Can we get it? Can we break through this 580? This 581.80 here? Nope, going right back up. So we're kind of tapering off around this level right here of support, which is cool. It makes sense. It was resistance here. It's support now. And this is my prime level of support, or my demand zone, as you would call it. This is a current supply zone up here. And then we have a higher level, which offers a supply zone right about here. Boop. Leave that in there. Like always, we can swing all the way back up there. We get some stuff going positive. But as of right now, it's just time for the market to relax. And we're really just in this range. There's a full range that I'll show you right now. The range started in October on the 2nd, right? And then we went from there and we ran all the way up here over the period of like a week, right? Where's the Monday at? It was Monday. Can't find it. Monday. Oh, here we are. It was Monday to Monday that we ran up over the period of a week, and that created the entire range. So where we were at the top of the range, half of the range this whole time, now we're in the bottom half of the range coming back down here again. So there's nothing to panic about. It's just the normal way that market structure should work. You go into a range, you stay up there, you dance, you struggle to get higher, you come on back down into the range, the bottom half of the range, you dance, and you struggle to get back up to the top. And then eventually you're either going to break through to the downside or you're going to push back up into that higher area. More than likely we'll break through to the downside because there's plenty of room to the downside, and we left behind quite a gap on ES. Let's go back to that 4-hour gap real quick. There was a massive gap up. Where are you? Let's shrink this down. Right here. So we got to be aware of that. We're trying to get back down to this point right here, to this gap that we left behind. Eventually, we will fill that gap if the market was to come down. If it doesn't come down, it only comes to right here. That's fine. About a halfway point of the gap is also possible. We just hit the next blue line. Excellent. I mean, this thing is giving up trades, and it is going in such a smooth trend to the downside. That's another 40 cents off right there. That is another 40 cents, 50 cents now that you could have been making to the downside, trusting the trend. Don't go against the meta, the most effective tactic available. Okay, trust the trend. Lots of people understand how to trade that trend. Don't be on the other side of that, the people who are just guessing and hopping in as it seems like it's going one way or the other. You're gonna get chopped up. Get yourself into a nice trend trade. Ride that puppy out for as long as that trend will go. As long as we stay below this 9 EMA, we are good. And, oh, by the way, I'm not a trend line trader. I should mention that. I will trade the trend line sometimes, but I'm not really a trend line trader. I am a supply and demand trader, so I like to get in as high as possible. But if I've missed the supply or demand, I'll start looking for the trend, and then I'll trade the trend line. I should clarify that for you guys, just so you know that I am not a trend line trader. I think it's a very effective tactic. I just don't use it. I like to get in as early as possible and get my trades that way. I think that works a little better for me than finding the trend. But you guys have a great day. This is already a long enough video without me going any further rambling on. Y'all know the motto. Take the easy money. Happy hunting out there. Once again, this is your boy Sebastian. This has been another full transparency trading session, and I'm out.